Everyone today is chasing the next big idea: AI startups, crypto platforms, software companies promising to change the world, another founder announcing a funding round, another company becoming a unicorn, another headline celebrating the future of technology. Your feeds are full of people disrupting industries. Everyone seems to be building something revolutionary. And if you are not building something that will change the world, it can feel like you are falling behind. But behind the headlines, something much quieter is happening. Some of the most reliable paths to wealth in today's economy aren't tech startups. They are laundromats, car washes, pest control companies, storage facilities, plumbing businesses, businesses so ordinary that most people never even consider them. Yet these boring businesses are quietly creating millionaires. And the reason has everything to do with how the modern economy actually works. What people are told the startup myth. For the past 2 decades, the dominant story of success has been the startup founder. Build something innovative, raise venture capital, scale quickly, sell the company for millions, get featured in TechCrunch. This narrative dominates media, business schools, and social networks. It is the dream sold to every young entrepreneur, but the reality behind startups looks very different. Around 90% of startups fail. Many collapse within the first 5 years. Tech startups have a 63% failure rate. AI startups fail at a 90% rate. Crypto ventures fail 95% of the time. Even venture-backed companies have extremely low success rates. Only a tiny fraction ever become profitable businesses. 75% of VC-backed startups never return a single dollar to their investors. The glamorous path attracts attention, but statistically, it is one of the riskiest ways to build wealth. Now, here is a number that should make you stop and think. Laundromats have a 95% success rate over 5 years, with 90% of customers being repeat business. The business nobody talks about has a 95% chance of working. The business everyone admires has a 10% chance. Something is very wrong with our definition of smart business. The quiet alternative, the boring businesses. While the world focuses on startups, another group of entrepreneurs is building wealth in industries most people overlook. Laundromats, car washes, self-storage facilities, pest control services, commercial cleaning companies, plumbing businesses, HVAC repair, waste removal. These businesses rarely appear in podcasts or startup conferences. Nobody writes articles about them. Nobody features them in TechCrunch, but many of them quietly generate strong and predictable profits year after year. Take Cody Sanchez. She worked at Goldman Sachs, Vanguard, and State Street. She built First Trust's billion-dollar Latin America business. She had the career everyone envies. In 2015, she bought a laundromat for $25,000. People thought she was crazy. Why would someone from high finance buy a place where people wash clothes? Today, she owns more than 26 boring businesses. Her net worth is estimated at over $17 million. Her platform, Contrarian Thinking, has over 2.5 million subscribers. Her book, Main Street Millionaire, became a New York Times bestseller. She did not build an app. She did not disrupt anything. She bought businesses that solve simple problems people face every single day, and she is not alone. In October 2024, the Wall Street Journal published an article titled America's New Millionaire Class: Plumbers and HVAC Entrepreneurs. Private equity firms have purchased over 800 HVAC, plumbing, and electrical companies since 2022. According to data from PitchBook, they are paying 7- and 8-figure buyouts to ordinary business owners. The US HVAC sector alone has over 100,000 privately owned businesses. Private equity sees gold, where most people see grease and sweat. These are not lottery winners. These are people who built simple service businesses over 10 to 15 years. They showed up, did the work, served their customers, then someone wrote them a check that changed their family's future forever. Why boring businesses win? At first glance, it may seem strange that these simple businesses perform so well, but once you look at the incentives, the explanation becomes clear. Recurring revenue. Most boring businesses rely on repeat customers. People wash clothes every week. Businesses require regular cleaning. Storage units are rented month after month. An HVAC maintenance contract renews annually. This creates stable cash flow instead of unpredictable sales. This predictability makes planning easier and reduces the constant pressure to find new customers. Essential demand. These services solve basic problems. A broken pipe must be fixed. A house must be cleaned. A building must be maintained. People can skip your productivity app. They cannot skip a dead air conditioner in summer. Demand for essential services remains steady regardless of economic conditions or tech trends with limited competition. Many entrepreneurs prefer exciting industries. Nobody dreams of owning a septic tank business. That is exactly why the margins are incredible. Most entrepreneurs chase exciting industries. That leaves more opportunity in unglamorous work. Industries like pest control, waste management, and commercial cleaning often have surprisingly little competition. Operational simplicity. Many of these businesses rely on simple and proven models. They do not require constant product updates. No pivots based on user feedback. No chasing product market fit for years. A laundromat needs machines, maintenance, and a clean space. The operations remain stable for years. The operations do not change dramatically over time. The numbers back this up. A single laundromat can generate $20,000 to $100,000 per month with 20 to 40% profit margins. Self-storage facilities with over 300 units can bring in more than $100,000 monthly with minimal staff. Commercial cleaning services can start with just $2,000 to $50,000 in startup costs. Vending machine operators report making $700,000 per year, working 2 days per week. The commercial cleaning market alone was valued at $182 billion in 2023 and is expected to grow to $277 billion by 2032. That is not a niche. That is a massive opportunity hiding in plain sight. The investor shift. Why private equity is buying Main Street. In recent years, private equity firms have begun aggressively buying small service businesses. Why? Because these industries are highly fragmented. A city may have dozens of small plumbing companies or HVAC contractors. Individually, these companies are small, but when combined into a larger network, they become extremely valuable. Investors call this strategy a roll-up. By acquiring multiple businesses in the same industry, investors can increase efficiency, expand markets, and dramatically increase company value. For the original owners, this often results in seven-figure buyouts. The plumber down the street who built a simple business over 15 years suddenly gets a check that changes his family's future forever. The demographic opportunity. Another reason these businesses are becoming attractive is demographics. Many small business owners are reaching retirement age. In many cases, their children do not want to take over the business. The kids grew up watching their parents work hard and want something different for themselves. This creates an opportunity for new entrepreneurs to purchase existing companies with proven revenue. Instead of inventing something new or starting from zero, they simply continue operating a business that already works. Laundromats typically sell for 4 to 6 times annual net revenue. Many sellers will even finance part of the deal themselves. They would rather sell to someone who cares than watch their life's work disappear. How to start. This is not complicated. Find a service everyone needs in your area. Car washes, laundromats, cleaning companies, storage facilities, HVAC services, plumbing, pest control, waste removal. Look for weak competition, industries where existing players provide poor service, where customers complain but have no alternatives, where showing up on time and doing quality work would make you stand out. Consider buying instead of building. Many boring business owners are approaching retirement age and looking for buyers. Start where you can. Not everyone can buy a $200,000 laundromat, but cleaning services can start with $2,000 to $50,000. Vending machines can start with a few $1,000s. Pressure washing requires minimal equipment. The key is entering a market with proven demand and building from there. The real lesson. The lesson here is not that innovation is useless. Some startups will always succeed. New technologies matter, progress matters, but the modern economy often rewards something much simpler: predictable cash flow, essential services, and businesses built on solving everyday problems. While the internet celebrates disruption, many of the most reliable fortunes are built quietly, not in startup incubators, but in laundromats, storage facilities, plumbing companies, and other industries most people ignore. The quiet millionaires figured something out. They chose cash flow over clout, freedom over status, boring over brilliant. They own businesses that solve unglamorous problems. They collect predictable revenue. They build equity year after year. They will never trend on social media, but they sleep well at night, and they are building real wealth while everyone else chases the next shiny thing that has a 90% chance of failing. The businesses may be boring, but the results are anything but. The most profitable path is rarely the most exciting one. Maybe it is time to reconsider what smart really looks like.